Okay, what is up, everyone? Super excited for today's video. Going to give you an update on the 50K portfolio. We actually just scratched 60K this past Friday. So really exciting stuff there. We're going to go over the best inflation hedge, right? And actually how I'm able to be up on the year. All right, we can see that we're about 19% up on the year. Specifically on the money that is invested. Okay, the 38,500 that's invested is up 19%, and then we do have 12,000 cash. And the reason being is because I like to sell options, right? I like to sell cash secured puts and covered calls to generate some more cash flow on top of dividends, right? So we'll break down the dividends. We'll look at the stocks that I'm selling options on and running the wheel strategy, and then we're going to break down the best hedge for inflation, right? If we look here, I have energy is a huge chunk of the portfolio. And as I've said in all of these videos, it's really just been the hedge. All right. Now it's greatly outperformed every other position. If we go ahead and take a look at the energy play, specifically, I have ticker symbol Gush, all right, which is actually a bullish ETF for energy, for oil and energy. We can see that position is up currently 76,850. So it's up to about 21,000 of market value off an initial 12,000 that was put into it. Okay. They also pay dividends on that. And we'll really just break down all these positions, why I'm in them. And then we'll go over the wheel, as I said. So let's go ahead and do that, right? So over here, we can see all of the options that I currently have in play. So if we look, right, we have, the strike, and we have whether it's a covered call or a cash secured put. Okay, so starting off with ZIM, ZIM, all right. I sold some covered calls on this one at the 25.5 strike, and then sold some cash secured puts at the 21 strike. Okay. And I generated about $20 off this one, $30 off this one. MJ is the marijuana sector or cannabis ETF, right? I sold a covered call on that one. I was able to generate $5. Okay, so it's not the most money I'm making off these, right? I'm not making thousands of dollars every single week coming in here and selling these options, but I was able to collect $438 in total premium based off of these options, so that's just more passive income on top of the dividends, right? Like I said, we just cracked 60K on the total account value. So that was really close to a 1% gain on the total account that I was able to get just from selling these. Now, bingo is another one I'm running the wheel on. I have the 4 strike for covered calls, sold a few of those. Sold some cash secured puts on the 1.5 strike. We have Fubo as well. Fubo, I have a few hundred shares, so I was able to sell 3 option contracts with the 4.5 strike. And I really did that last time Fubo had a nice little pop. And then we have the cash secured puts here at 2.5, selling those. We have Jumia, running the wheel on Jumia as well. And then Gush, right? Gush is really nice. The premium is so high on Gush. I was able to sell the 225 strike at and collect about $235 in premium. And then we have PHO, PHO. This is the water ETF. And not selling any cash secured puts on those. But I am selling the covered calls right here, the 52 strike. We have BKKT selling covered calls on that, and then DM selling covered calls on that. SPY G, I'm running the wheel on that. That's a SPY ETF, S&P 500 ETF, selling the 54 strike covered call and the 45 strike cash secured put. Able to collect a decent amount of premium, and like I said, that came up to 438. If we go over here to the portfolio, right, another form of passive income that we have is our dividends, right? So you can see I'm actually making about 10% on the year of this initial 38,000 invested, right? It's about $4,000 in annual dividends that we'll be collecting. We can see here that the next one to be paying some dividends is going to be on November 14th. That's going to be KMB. And I added this position here recently in the past few months, or I think about a month or two ago. And that one is currently up about 6%, from that initial investment. And I have this, I have everything in a bunch of different sectors, right? Now, technology is pretty risky, right? Especially with the Fed rate hikes. Those are going to be hurt the worst. Um, but there's still other things that you can invest in, and you don't want to stay out of the market really because you don't know when the market bottom is going to be. But I was able to get lucky. I'll just say that and put a lot of money into energy very early on. In the Discord, right? We have a private trading group. I mentioned, like last year in like November, I was like, okay, I'm selling all my shares, right? I had a bunch of shares and things that were pretty risky. And once I did that, I just reevaluated stuff and I was like, okay, well, let me put a bag into energy. And, that's a nice hedge. And as I said, it's been outperforming very, very well. Um, and we'll go over the rest of these positions. ZIM is one I recently just bought more of. Okay, so I currently have 120 shares. I've been working my way up from 100. And the reason being is because of the dividend yield percentage, right? So it pays 27.10 per share in its dividend. So if you look, its current price is only $23.17. So what this means is that, if you put in $2,000 on Zim, even if the stock price goes down, you're still going to be able to collect that premium, that 116% dividend, right? It's going to pay you $27.10 a share, even if the price of the share goes down. That's what they're paying. Now, if it goes up, right, and Zim goes up to like $40, then the dividend yield percentage will be different, but you're still getting that 27.10 per share. Now, it is a little bit risky. A lot of times, stocks that are paying these really high dividends, they can it could be for bad reasons, right? Maybe they can't attract investors and they need to just pay a really high dividend because they're in some trouble and they're just trying to attract as many investors as possible. Okay, so definitely not shilling any of these stocks on anyone and telling them to purchase them and go out and buy them just because I have them in this portfolio, but really just breaking down why, right? And the dividend hasn't been announced yet for when it's going to pay its next dividend, but KMB announced their next dividend on November 14th, and we should see SpyG and Gush and Zim, announce their dividend here soon. Okay, so make sure to follow up. I'll be making these videos pretty much every week and just giving you guys updates on what positions I'm in and out of. We can see my biggest losers have been tech related, right? We have Fubo right here, and this is even a new position, right? I thought I was able to wait long enough for Fubo to come down below $4 and start my position there, but it's still dropping. We had earnings here recently, and we did not go to the moon off of earnings, right? So it is always risky holding stuff through earnings, and that's the risk that you have to face, right? We have GILT, which is Galat Satellite Networks. Telecommunications is, pretty tough as well in this bear market. Those are down 28% on that one. Um, and then I have the Metaverse ETF right here, which surprisingly I thought would be down a lot more due to ticker symbol Meta, which is, Facebook and the Metaverse platforms. That stock has just been completely a bit obliterated. But, the METV Metaverse ETF is still holding up pretty nicely. And this is just a nice bundle of a lot of the large cap tech stocks, right? You have Microsoft in there, you have some of the chip companies, you have Google, you even have things like PayPal in there. So it's a nice bundle, and the stock is relatively cheap when it comes to dollar value, right? Maybe not valuation wise, but it's easier to sell covered calls on this than it is to buy two on Microsoft, right? Microsoft is much more expensive. Currently this stock is $7 a piece. So you can buy 700 shares, or you can buy 100 shares for $700, and then start selling some covered calls against that to collect a little bit of premium. Okay, so that's basically it, right? We went over the biggest positions that we're up on, the biggest positions that we're down on. We took a look at the dividends, how much dividends we're getting, and where those are coming from. And if you see here, 63% of this portfolio is allocated into dividend stocks, and that's a big That's on purpose, right? There's a big reason behind that. And it's because, you need to be prepared in this bear market. Things are uncertain. So it's not the time to just YOLO into all of the riskiest plays. It's time to really think about, all right, well, how can I, generate some income throughout this bear market? So that way, once we're out of this bear market, I have more cash than I would have had. And then you can readjust your portfolio once things go through, right? Now, energy, I think, is going to keep going up. So I'm going to be holding on to this gust position for a while, mostly through winter. And then after winter, we will see how things adjust. We'll see what the Fed is saying about rate hikes, if they're potentially going to be slowing down after in January, But for right now, the Fed does not seem to be slowing down at all. And, for the most part, tech and other things like that are still going to be hurt and really affected and drugged down by that. But the energy stocks, they're still going to be outperforming. Globally, a lot of companies are basically going to be making profit in the winter. Okay. A lot of people use more energy in the winter. If you look at the earnings report for a lot of the energy stocks right now, they're all posting record breaking profits, which has a lot of people mad. But, it kind of makes sense as well if you just think of everything that's been going on globally with, all of the developments throughout the year. You have the OPEC situation, you have the Russia Ukraine situation. There's a lot of things to factor into that, and so that's why a lot of people are overweight in their portfolios with energy, and that's the reason that I am as well.